follow the business sections of the papers, you may have noticed that in New York, there has been a trial going on featuring a former Goldman Sachs employee, Fabrice Tor. And he's talked about in connection with a case that's being litigated by the Securities and Exchange Commission. Talk a little bit about the case and why the SEC is doing it in the first place. We're joined by Bob Van Voris. He's with Bloomberg News. He's a legal reporter. Mr. Van Voris has been covering the case, and thanks for joining us this morning.
Glad to be here.
So, Mr. Van Voris, let's start with the basics. We have a picture here of someone named Fabrice Tor. Could you tell us first and foremost who he is and why the SEC is interested in him?
You bet. Fabrice Tor is a Frenchman, and in 2007, he was a 28-year-old trader at Goldman Sachs. The SEC sued him in 2010, sued Goldman Sachs as well, because of an investment that he structured, an investment that was backed by subprime mortgage bonds, and that went sour in the next couple of years, as a lot of those investments did. The SEC claims that Tor misled investors and participants in the deal about the role played by Paulson and Company. That's a New York hedge fund that made $15 billion shorting the U.S. housing market in 2006 and 2007. According to the SEC, what Tor did was not disclose to the investors that Paulson and Company helped pick out the portfolio of investments behind this vehicle that was called Abacus.
So Mr. Paulson picked the investments, but according to stories that you've written and others, Mr. Paulson also wanted those investments to fail.
Well, that's right. Paulson made a $1 billion bet against these investments. He shorted Abacus, and as I say, at the time, Paulson and Company was making massive bets against the U.S. housing market. The SEC claims that this was securities fraud. That having Paulson select the assets that it then bet against was unfair to investors, and that was responsible for the investors losing about $1 billion. The way the SEC tells it, it's kind of like you're playing poker against somebody and you get to pick some of the cards in his hand, but he doesn't know about it. The SEC claims that this investment was designed to fail from the beginning. And Paulson and Company has not been charged with any wrongdoing. John Paulson, the billionaire who runs the hedge fund, has not been charged with any wrongdoing. But the SEC sued Goldman and Fabrice Tor in 2010. Goldman Sachs settled several months later for $550 million, which was a record at the time. And Fabrice Tor went to trial with the case, and that we're 2 weeks into the trial right now with about a week to go.
So is Fabrice Tor a big fish in this case?
Fabrice Tor is not a big fish. He was a vice president at Goldman, a trader on their structured products group. As I say, he was only 28 years old. He supervised nobody. He worked in a vast trading floor with people sitting at either elbow, one of those people who has 6 screens on his desk. But he was in charge of putting together the marketing materials and assembling the 90 subprime residential mortgage securities that were behind this Abacus investment.
What's Fabrice Tor's defense in a nutshell?
Well, he's got a number of defenses. Number one, he claims he just didn't do it, that he didn't lie about Paulson's role in the investment to anyone. But he also says that any of the investors in Abacus, that it was completely transparent. You could just look at the mortgage-backed bonds that were in Abacus. There were 90 of them, and any investor could decide for themselves whether or not to invest. These are sophisticated investors. The investors that lost money are a big German bank, a big Dutch bank. In fact, Goldman Sachs ended up with a long position in Abacus and ended up losing money on the deal itself.
So as far as Fabrice Tor is concerned, he says he didn't do it. SEC says that is bringing the case against him. Talk a little bit then about because even part of the defense, or at least prosecution's case, is that several times Mr. Tor was kind of asked to clarify how much Mr. Paulson was willing to put into this investment, and by him saying or not saying things, it was kind of misrepresented to them as far as Paulson's intent on investing in the first place.
Well, that's right. There has been testimony by one of the participants, a company called ACA Management, and they were a company that was selected to come in and, as a third party, select the portfolio behind Abacus. Now, the executives at ACA claim that Goldman misled them into believing that Paulson was taking a long position, that it was investing in the equity of the investment, and that it was therefore making a bet that the housing market and the securities would do well. In fact, it was making exactly the opposite bet, and that's how the investors were allegedly misled. There's been evidence. One of the challenges for the SEC is that memories fade, and since this transaction, there hasn't been anybody who's been able to come up on the stand and say, Fabrice Tor lied to me about this transaction. So it's a circumstantial case. It's been based on emails. It's been based on Fabrice Tor's failure to return an email that suggested that ACA thought that Paulson and Company was long on the transaction rather than making a massive short bet.
202-585-3880 for Democrats, 202-585-3881 for Republicans, 202-585-3882 for Independents. And you can also send us tweets at C-SPAN WJ and email at journal@cspan.org. Again, we're talking about this case being litigated by the Securities and Exchange Commission in New York the last couple of weeks, taking a look at Goldman Sachs and this activity that Mr. Van Voorhis has talked about. Mr. Van Voorhis, I guess for our viewers, they may have questions reflected from Ken Weeks this morning. He asked you, does this finally represent a move by this administration and the SEC to diligently prosecute Wall Street bankers?
Well, there's a bunch of, there have been a bunch of cases brought by the SEC against banks, including Goldman Sachs, including Citigroup, Morgan Stanley. This case, as I said, has been pending since 2010. You probably know, viewers probably know that we have a new SEC commissioner, Mary Jo White, who spent about a decade as the chief federal prosecutor in Manhattan. A lot of people say that, I know for a fact that she's a very tough prosecutor. She has prosecuted lots of white-collar cases and lots of terrorism cases, including the 1993 World Trade Center bombing. And a lot of people say that she has sent signals, including the recent suit against SAC Capital, that indicate that she may be much more aggressive in enforcement than the SEC has been in the past.
How is the SEC doing in presenting its case?
Well, it's an interesting case. We've had a lot of jargon in the case. We've had a lot of embarrassing emails from Fabrice Tor that he wrote to his girlfriend back in 2007 as he was working late nights putting Abacus together. The jury has had a little bit of trouble, it appears, grasping some of the financial concepts and some of the esoteric Wall Street language that has come up in the trial. As a result, we've had, from time to time, jurors appearing distracted, and on several occasions, jurors appearing to be dozing off.
Let's go to our first call. This is Garish, Weston, Connecticut, Independent Line. Go ahead, please.
Good morning. In any transaction on a stock exchange, somebody is buying or somebody is selling, as a result of which the person buying thinks that the stock is going to up, the person selling thinks it may not go up or may go down. So different people are taking different positions. In this case, is there any suggestion that Goldman Sachs owed a fiduciary obligation to ACA or the buyers, and as a result of which they had to disclose everything they knew, or was it up to the sophisticated investor to figure out what is actually in those bonds they're buying, or those mortgages?
Well, that's an excellent question. In this case, you know, as you said, these are sophisticated buyers. They were supposed to be looking out for themselves, but Goldman and Tor had a duty not to lie to them, not to defraud them. And so, you know, to the extent that the SEC can prove its case that that they did just that they lied to them about something that was material to their investment decision, well, that's fraud, and then, you know, Tor can be found liable. He faces in this case, you know, it's a civil case, so he doesn't have to worry about going to prison as he would in a criminal case. But he is facing possible monetary fines, penalties, and a possible lifetime ban from the securities industry.
202-585-3880 for Democrats, 202-585-3881 for Republicans, 202-585-3882 for independents. And journal@cspan.org is the email. This is the comment from Jim this morning, Mr. Van Boris, on the case. He says nobody was forced or fooled. The investors sought the high return of the CDO and what it offered.
Well, and that's certainly the point of view that Tor is taking. You go back to late 2006 and 2007. Not everybody knew that the market was going to go into the tank, and that you know, people were going to not be able to pay their mortgages. And as a previous caller mentioned, there were sophisticated investors on both sides of this. Paulson was going short, but Paulson's short bets had to be balanced on the other side by people who thought that that the mortgages were going to be paid and that the securities were going to be successful. So there's a little bit of a hindsight bias here in looking at this, but you know, but there's certainly some validity to that.
One comment made about the SEC's, I guess, overall litigating against Wall Street because of the financial crisis. This is Chantal, who says offering up a peon as a sacrificial lamb is not accountability. What about the big fish who crashed our economy in 2008?
Well, that's an excellent point. The SEC has brought lots and lots of suits against companies. They claim they've filed suits against 66 top executives at companies, but a lot of these companies are sort of smaller fish, and the individuals, the executives who are sued at places like Citi and Goldman are, you know, more like Fabrice Tor, you know, people who were lower level, who structured the investments, but not the people who directed the banks through the credit crisis.
High Springs, Florida, independent line. Good morning. This is Stephen. Hello.
Good morning. Mr. Force, thank you for coming in on Sunday morning. I really, really appreciate it and your insight into this. I only get a chance to call once a month, so I'm going to make a small comment and then have you answer my question. My wife and I, we make around about $175,000 a year, and we live very comfortably. We come from a poor family that, you know, we kind of made it out of poverty. It would take us our entire careers, our entire household career, to make what these people who are running these companies make in a year. It would take our entire career to make that kind of money, what they make in 1 year. And we're seeing no accountability for people who are supposed to be making, you know, supposed to be able to make good decisions, and that's why they make the money that they make, is what we're told. We're also living in a society where we're also told at the same time that my family deserves to pay a higher comparable rate to our income than these people because they're quote-unquote job creators. And in my opinion, we're also being told that they can't be sent to jail because they're quote-unquote job creators.
So to your question about the case, sir?
Yes, sir, I do. And so we saw, if I can finish, we saw a complete lack of organization with the Wall Street protesters and things like that. But the bulk of America is tired of people who are in control of this big amount of money that affects a lot of people in this country. When are we finally going to see someone go to jail? And I'm not talking about 3 or 4 years here. I'm talking about for a long period of time, so that we can set a precedent, so that the people who are still there, who aren't in jail, can take some kind of accountability and say, wait a second, I might face 25, 30 years in jail here.
Caller, thanks.
Well, the caller puts his finger on a really important point. After the 2008 crisis, people lost their homes, people lost their jobs, people lost their retirement security. There's a lot of anger out there, and you see that reflected in the Occupy movement. And people are wondering why there haven't been more prosecutions of top executives at some of the banks and some of the institutions that they hold responsible for that, for the 2008 crash. I talked to prosecutors, I talked to regulators a lot about this, and the points that they make about this. And one thing that we're observing this past couple of weeks in the Fabrice Tour trial, these cases are extraordinarily difficult to bring. They involve very complicated transactions. The SEC in the Tour case is throwing an A-team of its own lawyers against it. There are 4 lawyers in court, including Matthew Martins, who's their the SEC's top litigator. Years of preparation go into this. The lawyers have to master all of this evidence, reams and reams of evidence, thousands of emails. So really, it's really a strain on government. Each one of these trials is a strain on government resources. So what they say is they have to pick their spots carefully.
Mr. Van Voorst, then why, in this case, target Fabrice Tour? Why not target John Paulson?
Well, that's a good question. And Paulson wasn't pursued in this. When you look at the way that this particular case is structured, the SEC alleges that that Tor put together materials that lied about Paulson's role. Paulson is kind of a step removed from that. Paulson didn't go out and affirmatively lie about its role. It just invested in the security, and it made a lot of money from it. But Tor is the person that they can put a finger on to say, here's a guy who we think lied to investors, and who we think, and I think that's why he's in the crosshairs.
Who is paying for Tor's legal fees?
Goldman Sachs is paying his legal fees. Goldman Sachs is also paying for his PR team, which has been attending the trial. They are very interested in the case. This is an issue that Goldman had hoped it had put behind it back in July 2010 when it settled. But the trial over the past couple of weeks is making headlines and bringing all of this back for people.
Next call is from Nick. He lives in Pleasanton, California.
Yeah, good morning. I watch C-SPAN a lot, and it's getting harder and harder to watch it because of all the baloney going on. Anyhow, I am absolutely amazed at how people really believe that the people running all these brokerages didn't know what was happening with the home mortgages. If they didn't know, why were they putting them together and junk bonds, basically, and selling them? They were doing that to protect themselves, and the homeowner was going to get the shaft regardless of what happens. Because in a home mortgage, that's all it's worth is what the home is worth. You're not going to make a bundle of money. And those people running the brokerages are controlling the stock market. They are telling companies how much money they have to make. And if they miss it by 1 penny, then they want to sell their stock. That's how they make their millions of dollars in bonuses. They're controlling it. They said it go up and make a lot of money. That's how they make their money, is buying and selling the bonds, and the investors get stuck for it.
Caller, thank you.
Well, there were a lot of winners. Most of us were losers in the 2008 crash. There were winners like Paulson and Company, Goldman Sachs, which came through the crisis and is today thriving. But you've also got to remember that there were some losers. Bear Stearns, Lehman Brothers, banks that don't exist anymore because they made bets that the housing market was going to continue to go up and got very badly burned.
As far as people who are defending for, or at least testifying for Mr. Tor and against him, who are these people?
Tor is his own star witness. He spent about a day and a half on the stand and telling his own story. He's grew up in France. He was educated in France. Got a degree from a top engineering school in Paris. Came to the United States and got a master's at Stanford and started working for Goldman Sachs. He has been, he appears lively and engaged. He speaks with something of a French accent, so he can occasionally be a little bit difficult for the court reporter and the jurors to understand. But I think, getting up on the stand, he is doing his very best to kind of get across to jurors that, he wasn't one of these masters of the universe, that he was part of a big organization on a transaction that was reviewed by lots and lots of other people and at a place where they have lots of institutional controls, and that he depended on those controls and those institutions to make sure that there was nothing wrong with the transaction. On the other side, the SEC has really made this a case about Wall Street greed. Matthew Martins, who I mentioned before, is the lead SEC lawyer. In his opening statement, used the phrase Wall Street greed, I think it was 7 times. So he is really trying to make this a case for the jurors about the gap between what people were doing on Wall Street and what they were saying. And if you let me read, here's one of the emails that Fabrice Tor was sending, and this was introduced. This has actually been a big part of the trial, is the emails that Fabrice was sending to his girlfriend at the same time that he was structuring some of these deals. So this was sent by Fabrice to his girlfriend on January 23rd, 2007. And this is at a time where he's working one of his many late nights on the Abacus deal. And he forwards to her an article sort of predicting doom to come in the financial markets. Fabrice writes, "Darling, you should take a look at this article. Very insightful. More and more leverage in the system. The whole building is about to collapse any time now. The only potential survivor, the fabulous Fab, standing in the middle of all these complex, highly levered, exotic trades he created without necessarily understanding all the implications of those monstrosities. Anyway, not feeling too guilty about this, the real purpose of my job is to make capital markets more efficient and ultimately provide the U.S. consumer with more efficient ways to leverage and finance himself. So there is a humble, noble, and ethical reason for my job." And then he has an emoticon winky face. "Amazing how good I am at convincing myself."
And the reaction, at least any sense of reaction from jury or anything else from that email?
Oh, absolutely. As I say, there have been some very dry parts of this trial, and jurors kind of drift off. When Tor took the stand and when he was compelled to read that email and some of the other emails that he sent his girlfriend, they are like this one. They're sort of a combination of pillow talk and market analysis and self-doubt from a 28-year-old writing his girlfriend at a time of stress. The jury paid very close attention to this. Now, Tor's lawyers say they don't matter. They're silly love notes by a young man to his girlfriend. The SEC, which brought them out, claims that this shows his real thoughts at a time that he was pretending that he was doing his best for his clients.
To give you a sense of how Mr. Tor is in person when he speaks, he testified before a Senate subcommittee back in April of 2010. He talked about the SEC's lawsuit against him. Here he is.
Goldman Sachs also had no economic motive to design the AC1 transaction to fail. Quite the contrary, we held long exposure in the transaction, just like ACA and just like IKB. When the securities referenced in AC1 declined in value, we lost money too, including around $83 million with respect to the retained long position.
And interesting that he pointed out that they lost money too in this transaction.
That's right. It's not one of the, there have been other deals and there have been lawsuits about other deals where banks are alleged to have taken toxic assets that they held for their own account and packaged them into these securities and then sold them off to clients. This isn't really that case. This is a case where Paulson, which was a client of Goldman, came in and was seeking a vehicle that they could use to short the housing market.
This is Ramona, California. Charles, thanks for holding on our independent line. You're on with Bob Van Voris of Bloomberg. Go ahead.
Bob, you need to look at the Commodity Futures Modernization Act of 2000, December 2000, that made residential mortgage-backed securities and all these derivatives off balance sheet to the top 10 bank holding companies in America. This is the result of the crime. Now, the second point, I just encourage you to go look at that in your work because nobody brings that up. All of these activities have been performed off balance sheet from the people who structured them. That's a straight statement. I am an expert witness, and the subject matter I'm on is when the asset-backed securities were set up, that was a new asset class from the real estate. When I have a home at a value of $1 million, the first trust deed was converted by my signature into the asset class called a bond security. The end point is this: the real estate property, the land property, cannot be taken from the homeowner under a grant deed.
Okay, let's let our guest respond, please. Mr. Van Voris.
The caller makes a great point. These securities are extremely complicated and very far removed, ultimately, from the individuals holding mortgages and homes, that are packaged into these securities. So, at a certain point, there's sort of a sense of unreality about them sometimes.
So if we've had 2 weeks of testimony so far, what's expected in this final week as things wrap up?
Well, we've got one more week, and as I say, Fabrice Tor just concluded his testimony. He is going to put on some witnesses, who participated in the transaction. The defense has said that it may call John Paulson to the stand, which will be very interesting if that happens. We should find out Monday if he's going to testify. The parties will wrap up probably on Friday or next Monday, and then the case will go to the jury. We've got 5 women and 4 men on the jury. They include a former stockbroker, an Episcopal priest, public school principal. It appears to be a pretty intelligent jury. But as I mentioned before, there's a lot of jargon. There's a real learning curve to figuring this out, and some of them have seemed kind of disconnected at times. So it's kind of hard to tell how that's going to play out.
If John Paulson does take the stand, does that change the nature of what goes on during the case, or do we learn information about his intentions leading up to this and those kind of issues?
Well, it'll certainly be interesting. We had already the testimony of Paolo Pellegrini, who was a top Paulson executive, who was one of the architects of this strategy of shorting the housing market and just making huge profits. He was a very interesting witness. He clearly projected the air of somebody who didn't feel he should be being questioned by the SEC, and at one point actually repudiated some previous testimony and accused the SEC of having tricked and intimidated him during its investigation of this transaction. If John Paulson testifies, he would be testifying as a witness for Tor, and it's expected that he would come up and say, nobody could have been fooled about Paulson's role in this transaction. Paulson was massively short. It was all over the papers, and everybody on Wall Street knew exactly where Paulson stood on the U.S. housing market.
Gregory from Pennsylvania Republican line with Bob Van Voris of Bloomberg. Hello.
Hello. Thank you, gentlemen, for taking my call. I find some interest in this matter because it seems to me like this Toure is nothing more than a footman and delivering the goods, whereas Paulson is the host and getting the cost of the enjoyment. And I think absorbing all those subprime mortgages was probably a good thing because they were mortally flawed real estate anyway and probably going to be torn down and resold as lots by the local municipalities. So it comes back to what Lloyd Blankfein said when he was first addressed. He said, well, all we're doing is God's work, and what he was doing was cleaning the house. So I don't see where the big fuss is about all this complications. I'm more interested in the poor black guy in Philadelphia who tried to access 50 cents from a tips bowl and got beat to a pulp by Philadelphia policemen at 30th Street Station.
Mr. Van Voris.
Well, that certainly makes sense, and as I mentioned before, there is a sense of frustration that you don't see some bigger names involved in some of these prosecutions, but certainly there are questions of where the government ought to direct their resources. But this is a big case for the SEC. This is a very high profile target. Goldman Sachs is a global company with 30,000 employees worldwide and something like $34 billion in revenues last year. It's got a very high profile. It was famously called the vampire squid in the pages of Rolling Stone by Matt Taibbi. And this is a big time for the SEC. A lot of people are watching this, and they've really got a lot riding on
for these type of cases that stem from the financial meltdown. Is there a statute of limitations at all?
Well, for most of these cases, yeah, there is a statute of limitations, and some of the statutes run out after 5 years. Some of these cases. You can't expect to be seeing too many more cases coming out of 2006, 2007, when a lot of these deals were put together. So some of these may be the last hurrah.
Chris from Pulaski, Tennessee, Democrats line.
Good morning, gentlemen. Thank you for taking my call. I'm not trying to kind of change the subject here. Is anything going to be happening as far as along the aluminum commodities scandal that I've recently heard about, as far as about Goldman Sachs basically buying up large quantities of aluminum and basically being able to price fix? Also, another question. Is anything going to be able to happen as far as with senators and congressmen basically being able to walk out of meetings, instantly call their stockbroker, and being able to make deals basically under the table as far as and being able to make profits off of that? Those are basically my two questions. Thank you for taking my call.
Well, those are two great questions. I am not very familiar with the aluminum issue, but I do know that Bloomberg has reported extensively on legislators and other government officials getting early notice of government actions and then going out and making money off of them. There is this is supposed to be a market where everybody where it's an even playing field, and you make money. You're supposed to make money if you're smarter and and if you make the right bets. But as we've seen, with a lot of the insider trading cases that have been brought in our courthouse here in Manhattan Federal Court, that's not always true, and a lot of times it's not. And so you're seeing the SEC, you're seeing the U.S. Attorney, the Justice Department going after SAC Capital. They sent hedge fund owner Raj Rajaratnam to prison. And in New York, the U.S. Attorney in New York, Preet Bharara, has brought insider trading cases against something like 80 people, and is so far undefeated. Has gotten convictions either by either trial or through guilty pleas of more than 70 of those people, with some of the cases still pending, including one of the SAC people, Matthew Martoma, who is charged with the largest insider trading case in history.
Who's the judge in this case, and anything significant we should learn about this person?
The judge is very interesting. Her name is Catherine Forrest, and I was lucky enough to sit down in her chambers and interview her several months ago. She's an Obama appointee. She's been on the bench for only 2 years. And just a year after she took the bench, I think it was last September, she struck down a provision of the National Defense Authorization Act of 2012 that its opponents claimed could result in Americans being held indefinitely without trial. That's not something that you usually see in a judge on her first year on the bench, but Judge Forrest is somebody who is extraordinarily confident, hardworking, and struck the law down after just a year on the bench. Interestingly, the appeals court here in New York reversed her just this week, actually last week, during the first week of the Fabrice tort trial. She is a former high-powered partner, making at a firm that made where the partners made about $3 million a year. She has taken a pay cut down to the judicial salary of $174,000 because she had a lifelong dream of being a judge, and she is moving the trial along, trying to keep the lawyers from getting too deep in the weeds as far as the Wall Street jargon and esoteric concepts are concerned, and appears to be doing a pretty good job.
Sharon is up next. Danvers, Massachusetts, Republican line. Hello.
Yes, hi. I just wanted to say I'm enjoying your show this morning. I'm learning a lot from Bob Van Voris. I just wanted to say that what can we do as little people in, our country, the citizens, to help rectify situations like this? Like, how can we, I know you said that government doesn't have a lot of resources to go after this type of situation, and but I notice we always have the money to go into another country for armed services, but what can we do as a citizen to help combat things like this? Because it very much disturbs me. And I was thinking if a person even put up a little banner in their car and saying, boycott Walmart for Monday or something, just something to go against a little bit of corporate America.
Well, that's a great question. I wish I had a great answer for you. I think, as I mentioned before, I think the Occupy movement, was grew out of some of the outrage that people had about the way that banks seem to be controlling the economy and the lack of accountability. I think that has led to some greater enforcement. I think that people complaining to their legislators, people calling into programs like this and expressing outrage, I think that has actually, I think that has had an effect, and I think that has resulted in a greater focus on these kind of financial crimes.
One last call, and this will be from Gwen Oak, Maryland, Independent Line. Lynn, hello.
Good morning, gentlemen. I think this gentleman, Fabrice Torres, he's just a small pawn in this big game of corruption. I think some of the other ones should have been probably arrested. And also, they're still allowed to, steal people's homes. They also actually are breaking into homes now. And I think it's a tragedy. I think all of them should be put in jail. Thank you.
Well, caller, I don't know whether Fabrice Torre would like to have you on his jury or not like to have you on his jury. If you want to put them all away, he doesn't want you. But I think he is trying to make the point that he's not a big fish, and he's not the guy that the SEC should have been targeting. And, at the end of the week, maybe not much longer after that, we'll find out what they think.
So a couple of final questions. This one from Twitter, would you classify the SEC case as weak or strong?
It's definitely a challenging case. There's a reason that Tor decided to take it to trial, and that's because he and his, he's got a very smart, well-paid legal team. So they think they can win, and I think they're feeling good about where they are right now. On the other side, the SEC believes that they've put in the case that they intended to prove. I think they are both cautiously optimistic, and I never predict what juries are going to do because I'm always fooled.
So then, to that point, Mr. Van Voorhis, you said this was an important case for the SEC. What does it say about the larger idea of, litigating against those things that happened during the financial collapse if the SEC wins or if the SEC loses?
Well, if the SEC wins, I think that's an important symbol that they've gone after one of the players, even though sort of a lower level one. And remember, they did recover $550 million in settlement from Goldman Sachs, and that's a lot of money. And a place like Goldman doesn't pay that kind of money lightly unless there's a good case. If they lose, I think it's going to be seen as a big loss. The SEC lost a case against a Citigroup executive last summer in the federal courthouse in Manhattan. There's a much bigger spotlight on this case. And the SEC has, suffered bad publicity from the Madoff scandal and criticism that it failed to prevent some of the things that happened in the 2008 meltdown. And so I think it's going to be a problem for them if they lose.
Bob Van Voorhis with Bloomberg News, been covering this case, and we'll probably cover it for the next week. Mr. Van Voorhis, thanks for your time in explaining this for us.
Thanks so much. About the role played by Paulson and Company. That's a New York hedge fund that made $15 billion shorting the U.S. housing market in 2006 and 2007. According to the SEC, what Tor did was not disclose to the investors that Paulson and Company helped pick out the portfolio of investments behind this vehicle that was called Abacus.
So Mr. Paulson picked the investments, but according to stories that you've written and others, Mr. Paulson also wanted those investments to fail.
Well, that's right. Paulson made a $1 billion bet against these investments. He shorted Abacus. As I say, at the time, Paulson and Company was making massive bets against the U.S. housing market. The SEC claims that this was securities fraud, that having Paulson select the assets that it then bet against was unfair to investors, and that that was responsible for the investors losing about $1 billion. The way the SEC tells it, it's kind of like you're playing poker against
the case against them. Talk a little bit then about because even part of the defense, or at least prosecution's case, is that several times Mr. Torr was kind of asked to clarify how much Mr. Paulson was willing to put into this investment, and by him saying or not saying things, it was kind of misrepresented to them as far as Paulson's intent on investing in the first place.
Well, that's right. There has been testimony by one of the participants, a company called ACA Management, and they were a company that was selected to come in and, as a third party, select the portfolio behind Abacus. Now, the executives at ACA claim that Goldman misled them into believing that Paulson was taking a long position, that it was investing in the equity of the investment, and that it was therefore making a bet that the housing market and the securities would do well. In fact, it was making exactly the opposite bet, and that's how the investors were allegedly misled. There's been evidence. One of the challenges for the SEC is that memories fade, and since this trials and assembling the 90 subprime residential mortgage securities that were behind this Abacus investment.
What's Fabrice Torr's defense in a nutshell?
Well, he's got a number of defenses. Number one, he claims he just didn't do it, that he didn't lie about Paulson's role in the investment to anyone. But he also says that that any of the investors in Abacus, that it was completely transparent. You could just look at the mortgage-backed bonds that were in Abacus. There were 90 of them, and any investor could decide for themselves whether or not to invest. These are sophisticated investors. The investors that lost money are a big German bank, a big Dutch bank. In fact, Goldman Sachs ended up with a long position in Abacus and ended up losing money on the deal itself.
So as far as Fabrice Torr is concerned, he says he didn't do it. SEC says that is bringing. Follow the business sections of the papers. You may have noticed that in New York, there has been a trial going on featuring a former Goldman Sachs employee, Fabrice Torr. And he's talked about in connection with a case that's being litigated by the Securities and Exchange Commission. Talk a little bit about the case and why the SEC is doing it in the first place. We're joined by Bob Van Voris. He's with Bloomberg News. He's a legal reporter. Mr. Van Voris has been covering the case, and thanks for joining us this morning.
Glad to be here.
So, Mr. Van Voris, let's start with the basics. We have a picture here of someone named Fabrice Torr. Could you tell us first and foremost who he is and why the SEC is interested in him?
You bet. Fabrice Torr is a Frenchman, and in 2007, he was a 28-year-old trader at Goldman Sachs. The SEC sued him in 2010, sued Goldman Sachs as well, because of an investment that he structured, an investment that was backed by subprime mortgage bonds, and that went sour in the next couple of years, as a lot of those investments did. The SEC claims that Torr misled investors and participants in the deal, and you get to pick some of the cards in his hand, but he doesn't know about it. The SEC claims that this investment was designed to fail from the beginning, and Paulson and Company has not been charged with any wrongdoing. John Paulson, the billionaire who runs the hedge fund, has not been charged with any wrongdoing. But the SEC sued Goldman and Fabrice Torr in 2010. Goldman Sachs settled several months later for $550 million, which was a record at the time. And Fabrice Torr went to trial with the case, and that we're 2 weeks into the trial right now with about a week to go.
So is Fabrice Torr a big fish in this case?
Fabrice Tour is not a big fish. He was a vice president at Goldman, a trader on their structured products group. As I say, he was only 28 years old. He supervised nobody. He worked in a vast trading floor with people sitting at either elbow. One of those people who has 6 screens on his desk. But he was in charge of putting together the marketing material.